Hi there. If you are a first home buyer in the Australian market and you're looking to access some of the government schemes, this is a video for you. The first home deposit scheme has just updated some of their details. So on this channel, we talk about all things finance, investments, and lending. And on this particular post, we're going to talk about the first home deposit scheme. So just to give you a quick idea on what the scheme is, it's a scheme that started about 2 to 3 years ago, and there are releases every January and July. All right, normally there's 10,000 spots released. And normally half of the allocation goes through to NAB, half of the allocation goes through to Commonwealth Bank, and then the other 50% of the allocation goes to a whole list of other banks, like small credit unions and things, and regional banks. Now what happens is you get one spot in this scheme and it enables the government to go guarantor for you for your next home purchase. So I'll give you a very easy example. Let's say you're in the Sydney market and you're wanting to buy a unit. The unit price is $500,000 and you've saved a 5% deposit. So you've saved minimum $25,000, and that's a genuine saving, which means that you've saved that money, put it into your account, and shown the bank that you have saved it over a 3+ month period, as opposed to making a big sale of a purchase, something like a car. They don't like seeing that. They want to see you genuinely saving the money. All right, what you do is, 1, make sure that your tax return is lodged and up to date. 2, make sure you've got all your IDs sorted and things like that. And then 3, what you do is you go to your first home buyer website and you check your stamp duty exemption first. So you go to your state website, whichever one it is, go onto Google, go onto it, and there's an eligibility list that enables you to check to see if you are getting the stamp duty waiver. And some states do give an extra bonus of $5,000 to $10,000 if you're buying new or you're building. So make sure you check your eligibility for that. And if you do not know if you're eligible or not, don't go chasing your mortgage broker, don't go chasing your solicitor. Email that website directly and ask for a ruling, okay? Wait for the ruling to come back. Make sure you go through the eligibility checklist, give them the answers, and then tell them the one that you have an issue with and why, and ask for their ruling on it. All right, once you've got that, you document it and you put it in your file, then you go and deal with a mortgage broker. All right, so this scheme is where you're not paying lender's mortgage insurance. So I'll give you an example. There's 50 banks on the market, and the main 2 LMI providers, so lender's mortgage insurance, is QBE and Genworth, and Genworth's the bigger one. And all lender's mortgage insurance is a charge that the bank pays against you defaulting for taking out a very small mortgage. All right, because if you're putting in 5 or 10%, you are looked at as being a higher risk mortgage. So the bank takes out a once-off insurance policy against you defaulting. Okay, now that fee goes on top of the loan or out of your pocket once at the time of settlement, and then you either capitalize it on the mortgage over a 30-year term or you pay it directly out of your pocket. Now, as far as this scheme goes, it's very similar to how a parent goes guarantee for a child. Okay, so what happens is, let's say for instance you've got that 500k unit. You've saved up your 25 grand and you don't want to pay LMI. All right, so what you do is you give your parents' property as security. They go guarantor for you. A charge goes against their property as security for yours, and then you don't get LMI payments. All right, so you save yourself maybe $10,000 to $15,000 on a 500 grand mortgage. And if you do want to check what the LMI payments will be, you just go on to Google, you type in Genworth, so GENWORTH, and then space LMI, and then space calculator. Click on the top link and it's LMI calculator. Got very easy, simple 6 boxes, and you can run through as many scenarios as you want to figure out what the LMI payment will be. All right, so this scheme's very similar to that. So instead of your parent going as security, this is the government going as security. So one, you make sure you contact one of the banks that has spots. Two, you make sure that you do that at the time, so January or July when the allocation is given, because in any point in the market, there's between 90 to 110,000 first home buyers in the market. All right, so if there's only 10,000 spots released, a lot of the time it's over allocated. All right, so you need to make sure you get your spot. And then you've got normally 90 days to go out and find a property and sign on it and present a contract. All right, if you do, some of them allow you for an extra 30 days to roll it, but that's it. So if you're going on this scheme and you think you're going to have a whole lot of time to make a purchase, you absolutely do not. And if you want that benefit, you need to be active, you need to be making offers, and you need to get it done quickly. Okay, a lot of people, when they get pre-approvals, they're all active in the first couple of weeks, and then business and work and home life, they get very busy, and then a lot of the time, over 50% of pre-approvals lodged to banks right now, people are not proceeding on. So this is not one of those times. So if you get a spot, you should consider yourself lucky, and you should try and find a property as soon as possible. Sign it on a contract, present it to the lender, and then everything gets done in the background as far as making sure that the guarantee is set up and the lender is happy, and then you won't pay LMI. So in that example of a 500k unit, you're going to have a situation where the mortgage is 475 because you've saved the 25 grand and given that as a deposit. Okay, and you're not paying your LMI on the full 20%. All right, so you've got a situation where if you put a 5% deposit down, you could be paying 15 grand plus in LMI. Under this scheme, you're paying no LMI, but there are quite a few hurdles to go through. So one, always go to your the first home deposit website, check your eligibility. Two, go to your state website, check your stamp duty waivers and your eligibility for that. Three, if you're buying new or building new or buying off the plan, make sure you check your key dates on when it's going to settle. Make sure that it's all set up for this. Okay, once you've done all that, then you look at what's happened just now. Look, everyone understands that prices are going up on property. So that's why this scheme has been bumped up an extra 100,000. So you can see, if we read through the post, so great win for the first home buyers. Property price caps to be raised to 900,000 in the Sydney market for the first home loan deposit scheme. Buyers with a deposit as low as 5% can apply to the scheme, in which the government guarantees up to 15% of the mortgage without paying lender's mortgage insurance. Alright, so this is just getting that good information out there. Hope that you've enjoyed this video. Hope it's providing a lot of value to you. Make sure you hit that like button, hit that subscribe button, and leave me a comment if you're finding these kind of videos of value. Alright, we'll see you on the next one. Alright then, bye.